Well, Lupin is the stock on our radar. Posted a weak set of numbers. Ekta caught up with the management and began by asking them about the quarter gone by and to decode the impact of the one-offs in the quarter. Listen in.
Roughly around a $50 million impact on the quarter based on the decisions we made to strengthen our business going forward. Combination of paring down inventories, trade inventories that were running at a high level, doing some shelf stock adjustment to ensure competitiveness. Plus, we had guided that we are going to take steps to get out of products that are negative or low margin due to the price erosion that we've witnessed in the last couple of years. So we did that on approximately 15 products. That is the impact that you see on the revenues.
Okay. So, Nilesh, what is the guidance in coming quarters for the US? Because the streets seem to be disappointed with this quarter's performance, the one-offs in the US business. What is the quarterly run rate that we can expect in the US? And when do you probably expect to get back to that $200 million guidance which you had provided?
So I think Vinita is better equipped to answer. But from my perspective, if we adjusted for some of the one-offs that we took, we would have been at that $160, $170 million kind of number. That's the number that I would expect for the next couple of quarters as well. So that's the bounce back that we expect from this 120 odd million to 160 million plus Q2 onwards. Getting back to the 200 million is going to now mean more new products. So, in the near term, we obviously have Suprep that we will launch this quarter. But I think the big one for us is going to be tiotropium, which will be a Q4 event. With that, I think certainly we would be talking, pretty much the kind of numbers that you talked, getting back to that, 200 billion plus kind of number. So I think the next two quarters are going to be a bounce back from what we did in Q1. But I think Q4 is where you would see, even further ramp up. We ourselves are, forget the others, we ourselves are very disappointed with this. But in many ways, this was a cleanup. I think this was coming for a little while. And we just thought we should set this so that the business is set for sustainable long-term growth.
Ramesh, I wanted to understand what went wrong with the margins this quarter. And are you on track for that guidance of an 18% exit run rate in FY23?
Thank you, Ekta, for having us on. But as Vinita and Nilesh were saying, we actually guided for a pretty lackluster performance in the first half of the current year. So it is not really a big surprise from my perspective. So we recognize that there are stock corrections to be taken in America. And as Vinita was saying, we did take that. There is an impact of that which actually cascades to the bottom line. And insofar as the improvement to the margins are concerned, I think the gross margin decline, of course, the overall absolute numbers also kind of mask the impact of various initiatives that you have taken. And as Vinita was talking about it, we have taken significant strides in terms of correcting all that we have done in terms of investing ahead of the curve. So essentially, our manufacturing footprint, the capacities that we have and the like, which actually contribute to idle time. So we took manpower reduction, workforce reduction across the plants and other parts also. There's overall 14 to 15% reduction because of that. All of this is actually going as per our overall plan. So the guidance that we spoke about in terms of progressive increase on the EBITDA margin front, I think it is certainly, you would see that. The second quarter is certainly going to be better than the first quarter, and the third better than the second. And towards the end of the year, I would say that the exit run rate should be closer to 18%.
Okay. Nilesh, give us a sense on the India business and throw in your sense on how the diagnostic business performed as well.
Sure. I hate qualifying our performance on the India business, but as you know, last year, first quarter was very big for the COVID medicines. Thankfully, all of that is behind us now. The market degrew 1.8% versus that we actually grew 1%. And X of our COVID medicines, we grew 5.6%. So low growth sequentially, obviously the growth was high, but that's Q4 coming into Q1. But our target therapy areas, which are cardiovascular, diabetes, respiratory, all of these grew slower than the market. So we did better than our peers in these categories, and that's reflected in our increase in market share. But overall, that's the reason why growth was lower than what we would expect. For the next 3 quarters, we would basically expect to grow a double digit again. So we see that year-on-year kind of growth coming back. So, we're doing a lot in India. We added 350 representatives. We've created 3 new divisions. So a lot of plans in India, and we're obviously very optimistic about it. The diagnostic business still small. It's not even been a year since they've been there, but they're ahead of budget each month, and they're growing, each month versus the earlier month. So they're on a good track. I would hope that in the next 2 years we'd actually, get to a sizable chunk, and we'd also be making money. But the initial traction has been very solid.
Okay, so that exactly, what is the update on Spiriva generic? Because last time we spoke, your German manufacturer partner had to have a USFDA inspection. How did that inspection turn out? And when do you expect final approval?
Yeah, so the inspection, from our perspective, went pretty well. And, we have been corresponding with the agency with the questions that they have on the application. At this point, we believe that we have responded to all of the agency's, questions, and are hoping for an approval, before we are ready to launch in Q4.
Okay.
This fiscal year.
The Indore facility, it's filed from there, I understand. Are you expecting a USFDA inspection? Has it already taken place?
So the site was already inspected for tiotropium in the past.
Okay.
So, of course, it will be up to the agency to determine whether they want to re-inspect the site or not. But, at this point, we are ready to host an inspection as well. If the agency wants to inspect and believe that, we could, in the next 6 months, have everything together to ensure a solid launch in Q4.
Before we just wrap up this conversation, Vinita, I just had a larger question. Vinita, Nilesh, feel free to take this. There's been a steep underperformance in the Lupin stock. It's down over 40% from its 52-week high. And the street, it seems, is always a little disappointed by the performance, especially in the past couple of quarters. What can you do to assuage these concerns? What is your sense in terms of the way forward?
Yeah, so definitely the last couple of quarters have been significantly impacted by market conditions, as well as, as we spoke about this particular quarter, actions we took to strengthen the business going forward. We feel pretty good about, one, really optimizing our base business, which is well underway. And two, our new product launches. As we look at our performance on the few new complex product launches that we've had in the US, whether it is albuterol or Brovana, that really contributed very nicely to top line and bottom line as well. Obviously, it gets lost in the overall numbers, but when you start looking at the silver lining, certainly it's what gives us confidence of continuing to grow our business on a very profitable basis as we really unfold our pipeline in the years to come. And as we look at growing our respiratory portfolio in the US, bringing our biosimilars to market, to bring our injectable products to market, where we have, a number of products over the next 2 to 3 years, we have a very high degree of confidence of growing our business, not only on the top line, but more so on the bottom line from a margin perspective, to set it up for very strong long-term growth.
All right, with that, we'll step to a short break. On the other side, we get chatting about market technicals with